what extent do the unique features of government accounting make a difference on financial statements? Well, we're going to see. Year one, the company appropriated $12,000 for employee education and training. So when it tells us it appropriates $12,000 for education and training, what does that mean to you? It's earmarked, isn't it? It's earmarked solely, this money is going to be used for this purpose, okay? So in knowing that, the journal entry that we would use for year one.
So that's all we're doing here is doing journal entries?
Yep, we're just doing journal entries, that's it.
Well, why doesn't it say
I know.
that? I mean, this book is terrible, Nancy. It doesn't tell you what you're supposed to be doing
Okay.
in any of the problems.
But it does. Look what it said. Look where it says it. Number one, prepare all required journal entries that would affect the expenditure sub-account education and training, including budgetary and closing entries. It's okay. I hear it's frustrating, but
And the construction's first, and then the problem.
Yeah.
okay. So we're going to record journal entries, guys, okay, as it relates to these sub-accounts. So the county appropriated $13,500 for employee education and training. What do you think we're going to do here?
Yeah, where'd you get 13.5? Oh, you're on year 2.
God.
12,000.
Year one, 12,000, guys. So we're going to take this money that we want to earmark for specific purposes and take it out of the fund balance and appropriate it. So we are going to debit fund balance unassigned for 12. And we are going to earmark that appropriations, education and training for 12,000. And this is basically to record appropriations. Okay? Signed contracts with outside consultants to conduct accounting and auditing workshops. Total cost was $10,000. So it doesn't sound like they paid the bill. They made a commitment, didn't they? And when you make a commitment, we have got to report it. So we're going to show encumbrances. So encumbrances for 10,000, and then we're going to show fund balance committed for encumbrances of 10,000. Okay? And this is to encumber contracts with consultants. So basically we want to encumber that money so it's not being used for anything else. You tell me when I can go on. Okay, next one. Let's look here. The consultants conducted the workshop and were paid $10,000. So what do we need to do?
Take the money out.
We want to take the money out. We encumbered this money. Now we're going to pay it, aren't we?
Yeah.
So we're going to, first of all, pay the money, which means we're going to debit as expenditures for education and training for 10,000. And this is going to be cash for 10. Then, since we've paid it, we don't need to encumber that anymore.
Consultant conducted the workshop.
Right, so the second one and the third one go together.
Yeah,
when-
the first one was like signing the contract.
The first one was basically in the budget, we're showing we're appropriating so much money for education and training.
Right.
So we're appropriating this amount.
So you're appropriating 12 grand towards it, and now you're using 10 out of that?
We're using 10 out of it. So
Oh, okay.
when we went to make that commitment, we debited encumbrances, credited fund balance. Now we're going to pay it. So we're just showing, guys, you could say the expenditure, we're just using the term education and training.
Okay.
That's just, we're just using that subcategory. Oh, Judy. And so, but what we now want to do, this is to record the expenditure. Now, the next one we want to do is to reverse out that encumbrances, because since we received the services and we've paid for the services, we can reverse that encumbrance, because it's no longer the money's being encumbered, we've paid it out, haven't we? So we're going to just totally do the opposite. What did we do initially? Fund balance, committed for encumbrances of 10, and we're going to credit encumbrances for 10, and this is to reverse out encumbrances upon receipt of services. Does that make sense?
Not at all.
Why do it twice?
What are we doing twice? It might look like we're doing something twice. Up here, this encumbrances encumbered the monies.
Kind of like making a deposit and a withdrawal. Basically.
Here's,
Here's the money and now you're
I
taking
look
it out.
at it as
Like earmarking it like
we're
that?
we're earmarking it because we have to encumber the money so it won't be used for something else. Then it was, once we committed, we encumbered the money when we made the commitment.
So we're basically making a journal entry to speak for that money?
Yes. Yes. The journal entry does
Someone
not,
else doesn't grab it out of the
yes.
Yeah.
And then once we've paid for it, which we show we've paid for, we need to reverse this entry out because it's not encumbered anymore. It's been satisfied. So no one else grabs it. Exactly.
What's the last line on there?
To reverse out encumbrance.
To reverse out encumbrances upon receipt of services. Does it?
An extra $5 trillion that we're gonna put under the debt into our budget.
The department ordered books and training materials, which it estimated would cost $1,800. As of the end of the year, the materials have not been received. This is a key one, okay? This is key. What are we gonna do here?
You have to encumber the money, right?
We first need to encumber this money. So we're going to show encumbrances, because we kind of did a purchase order already, huh? To encumber order for books, we're going to do a fund balance, committed for encumbrances of $1,800, and this is to encumber order for books and training materials for $1,800. Okay? Then
That should be it, right? They haven't received them, right?
assume that the appropriations lapse at year end, thus all expenditures in year 2 would be charged against the year's appropriations of 13.5, even if the goods and services were ordered in year 1. Okay, so basically, we ordered the, we showed the encumbrance in the fund balance committed for encumbrances. We show that in there. We don't receive it till the next year, but we show it in there. Okay, now we need to close out the books here because year 1 is over. So basically, what we're going to do is this year one to record our appropriations. What are we going to do here? We're going to just totally reverse it. Okay? So when we go down here and we show a debit to appropriations, education and training, and we credit fund balance unassigned, what are we doing? We're just, what we originally recorded, we're reversing. Okay? And this is to close appropriations account. Now zeroed out our appropriations. Now we need to, at the end of year one, how much of our fund balances were unassigned? Fund balances unassigned, fund balances committed, expenditures, and encumbrances. This closes out okay, so the 1,800 here of encumbrances we're going to close out. The expenditures we had were what? Up here, 10,000? Whoops. So that 10,000 and this 1,800 we're going to close out. The 1,800, the 10,000 we're going to close out. Okay? This 1,800 was committed, and our fund balance unassigned of 10,000 is unassigned. So basically what we're doing, think of it like an income statement that you're zeroing out at the end of the year and putting over into owner's equity. We're kind of doing the same thing here. Our expenditures and our encumbrances we're zeroing out, and we're flowing them into the bucket, the big fund balance bucket. Do you know what I'm talking about? So we're just zeroing out those items that were temporary accounts that are now, we're starting a new year, so we got to start back at zero. Okay, year two. Our year two, the county appropriated $13,500 for employee education and training. We're going to do it the same way again. How are we going to do this one? Just like at the first year. Right? 13,500 debit to fund balance unassigned, credit of appropriations, education and training. Right? Next. The department received and paid for the books and training materials that it ordered the previous year. Actual cost was only $1,700.